This is another in the series of unique attributes of HGSI, things that we can do in HGSI that are not so easy to do or impossible to do with other software programs. And this session is going to be about market analysis before the market opens. So what I'm doing is I'm going to go into the W&B user groups. These are groups that I created many years ago. They've been modified somewhat, but as you can see, there is a lot in here that you can use. But I'm going to concentrate on some ETFs this morning. I'm going to go down to number 3 under the W&B user groups and click on that folder, and you can see that there are several SPDR or S&P ETFs in here. They all have either SPDR or S&P in the name. I'm going to click through to the warehouse view, and the warehouse view that I'm using is under Ron Brown, and I am looking at top-down analysis VPA scorecards trend combo. Now I've been experimenting with different combos. I did not change the name of this because it's just easier to leave it where it is while I experiment, and I'll settle on something eventually. But anyway, let me show you how this works. I am using this view, and the current combo weights the 50-day, the 100-day, the 200-day, and the 18-day all equally at 20% of the weighting, and then the percentage price change over the last 5 days at 20%. And the indexes, or the ETFs in this instance, best fit those criteria are going to come to the top when I click on the raw combo. Now the raw combo is essentially just as I like to look at it, it's the best fit of any of these indexes based upon these combo fields. So what do we have here? We have the financial sector. We know the financial sector has been strong, and I can tell this several ways. Look over here at the VPA best fit trend. This is a long-term trend, medium-term trend, and the short-term trend. But if I want a more recent look, I just sort on the percentage price change 1 day and look across to the percentage price change 5 days. I can see that it was up 0.1% yesterday. I'm sorry, I'm looking at the retail sector here. I want to go up here to the tech sector, the top one from yesterday, up 0.6, but over a 5-day period it was down 0.6. So this group gained a little ground yesterday, but over the past 5 days it's still down. Now let's look over here at this scorecard. You can see that the long-term trend is up, the medium-term trend is down, and the short-term trend is down. And if you're in any of these tech stocks, or you've been watching the tech stocks, you know that there has been a pullback in tech stocks. So looking at this column right here, VPA, if there's a VPA signal today, there's going to be a yes in here. And on this one, it's a test for supply. I'm going to bring a chart up, and the chart that I'm using is my number 7 chart in the end of day and under featured charts. It's 3, 6, and 18-day EMAs, or exponential moving averages, expansion, contraction, pocket pivots. That's quite a mouthful, but you can see the pocket pivots are down here in this window. The expansion, contraction is in this window, and when a stock or a index or an ETF is moving up, you're going to see the green histogram above the center line, and that represents the difference between the 3-day exponential moving average and the 18-day exponential moving average. If I put a crosshair on here by using my alternate C key, you can see it was bouncing around down here, and then it crossed over. As it crossed over, the 3 is moving away from the 18, and that tells me we're going from contraction to expansion, and it built, and then it kind of leveled off here, and then it moved up. So the more the 3 moves away from the 18, the greater the histogram is. And look along the way, you can see where there was heavy buying with the pocket pivots, the green, and here's a negative pocket pivot here, but the next day it turned around and went up. Now you can see that this group has had several negative pocket pivots recently and no positive pocket pivots. It struggled up here, and then we got an effort to fall. Here was a test for supply on Tuesday. Buyers stepped in, but the profit takers and people that wanted out, or traders that wanted out, forced it back down. That's why we get this signal right here. It's called a transfer of ownership. They were buying, running it up, but profit taking set in, and the money was transferred from traders who wanted to get out of this position to those who were trying to pick the bottom. And if the traders that were buying up in this area here ended up with a losing trade. Now, what we have as of yesterday, which was Wednesday, and this was December 6th yesterday. This is December 7th. A VPA flag, another test for supply, was generated. If I click on here, you can see it's a low volume test or a test for supply. They're one and the same, and you can see that support is holding across a 2-day period. By that, I mean that this low is very close to this low. So why is this a low volume test? Because if you look down here and compare the volume, you can see that this volume is much lower than the prior days, but yet the ETF closed near its daily high. So it was there's a test to see how much support is under the market in the tech sector, or at least with this ETF. And if you look at if you would go in and look and see what's in the XLK, you could see which stocks are really providing the support. Even though we're getting a test for supply, I would be very cautious, and I am cautious right now because of a couple of reasons. You can see that the 3 and the 18, the histogram is negative because the 3 is below the 18, so it dropped negative, and so the short-term trend is still down based upon those moving averages. And also the volume point of control, which is something that Matt put in for me based upon 10 periods, the volume point of control is still negative. Now, I know a lot of people like to jump in and try to bottom fish these stocks, and maybe it's going to hold here. Let me bring that crosshair back up again, and if I do this, and if you look at support here and you go back over here, this gap is slightly below, and it's also probably providing some support. But so we have some negatives and some positive here. We do have a force index 2-day which turned green, and that's today's close minus yesterday's close times today's volume, and there was just enough, as you can see, to get that blue line over the 0 line, so it turned positive. Now, when there is real strength in an index, you're going to see the 13-day force positive. You can see that the 2 and 13 both turned negative on this day right here, which you would expect on the effort to fall VPA flag and the big black candle. Okay, getting back to this, I don't want to make this video too long, so let's just take a quick look and see where the strength was yesterday. The consumer staples have been strong for a long time, and look at this, it closed at 100% of its daily range, and the techs closed at 85.64% of their daily range. This is A, accumulation. These trends are up. The long term, the medium term, and the short term, and the VPOC is positive. This is what's showing up on the chart. This is the VPOC 1010. Down here, it appeared a day before, or a couple of days, let's see, one day before the pocket pivot. At the same time, you can see the histogram was starting to move up. Takes a little while for the histogram because the difference between the 3 and the 18, but it moved up. It turned positive, and this ETF has not looked back. So let's just go here to this candle right here, because the VPOC turned positive. That's the early signal. And I'm going to click on alternate A, which brings up the annotation tools. I'll take it from the next day's open and to the close yesterday, and over 19 periods, the change is almost 7% in this ETF, which is a nice move, obviously. So this is where the strength has been. Now, if you want to see what's in the consumer staples sector, what I would do is just go down to sectors by stock, and you can see the consumer staples are on top here, and this is the index. And you can just change to the index group, and then you want to start analyzing from here. Now, there's 184 securities in here, so you have to get into other methods of analyzing, and there are all kinds of screens here, and this is something I'm going to get into, especially when I start doing a webinar series beginning in January. But let's just, as an example, I'm going to go to the scorecard end of day. This has the combo strong trends up. I'll sort on raw combo. And if you look over here to the right, you can see that this is mostly green. On the short term, this one, I'm not familiar with this stock. The short term trend was down, but what do we have here? We have a $1.50 stock, but even though it's $1.50, I'm going to look at it for the same reasons I looked at the ETF. Force 13 is green. The Force 2 turned green. We have an effort to rise. We have a pocket pivot. We have a VPOC, which turned from rose to green. The histogram has been positive. Big move up, and then it just moves sideways. Now, you have to be careful. This is an inexpensive stock with negative earnings. So somebody's buying it for a reason, maybe because of the group. This is the group line. Let's look at another stock here. This is Brown and Foreman. You can see that the 3 crossed above the 6 down here. The VPOC once again led. Here's the confirmation with a pocket pivot. The force indexes are both green up here, and the histogram is starting to increase. Now, this group, consumer staples, beverages, this is a beverages group, it has not been so strong. So this stock has been outperforming, but look how tight this stock is. I mean, now it's a little bit dangerous because you can see there's a transfer of ownership up here, a buyable gap up, but selling on the same day. So it's had its run. It probably needs to digest this. Anyway, I'm going to end this video right now. There's so much I can talk about with HGSI and its power. I just want to show you a few things that I look at, and I'll really get into market analysis more at the webinars, but I may do some more videos too. Thanks for